The Rivian R2 represents the most important vehicle the young American EV company has ever planned. While Rivian built its reputation on the rugged R1T pickup and the adventurous R1S SUV, both of those vehicles sit firmly in premium territory. The R2 is different. This compact electric SUV is designed to bring Rivian's design language, technology, and outdoor-focused identity to a much broader audience, and Rivian says it is still on track to do exactly that. According to Rivian, the R2 will begin production in the first half of 2026 and will start at around $45,000. In a market where electric vehicle prices have been rising and consumer confidence has been shaken by economic uncertainty, that price point is critical. Rivian's leadership has repeatedly emphasized that the two South African rand is not a concept or a distant promise, but a vehicle already deep into development. On its recent earnings call, Rivian CEO RJ Scaring confirmed that the R2 program is well underway. The company has already begun assembling validation builds, which are near production prototypes used to test manufacturing processes, quality standards, and component integration. These builds are being assembled using mostly production tooling, a strong indicator that Rivian is moving beyond theory and into real-world execution. Production of the R2 will initially take place at Rivian's existing factory in Normal, Illinois. While the company originally planned to build the R2 at a new facility in Georgia, that plan has shifted. The Georgia factory is still under construction and is expected to begin operations in 2028, supported by a $6.6 billion loan from the U.S. Department of Energy. In the meantime, the Normal plant is being expanded to handle R2 production. Rivian says the Normal facility will be capable of producing up to 155,000 R2 vehicles per year. The physical extension that will house the R2 assembly line and paint shop has already been completed. According to Rivian's leadership, all necessary manufacturing equipment has been sourced and is now in the testing and calibration phase. This suggests the company is methodically preparing for volume production rather than rushing unfinished systems into service. The Rivian R2 is positioned as a direct competitor to vehicles like the Tesla Model Y, but with Rivian's own distinct character. When it was revealed, Rivian promised a range of over 300 miles, modern driver assistance technology, and a practical interior designed for everyday use as well as adventure. An optional all-wheel drive tri-motor performance version will also be offered, appealing to buyers who want stronger acceleration and off-road capability. A major question surrounding the R2 has been whether Rivian can truly deliver on its promised starting price. Trade tensions, new tariffs, and rising component costs have created challenges for nearly every automaker. Despite this, Rivian has stated clearly that it does not plan to raise the $45,000 starting price for the R2. That commitment is notable, especially as Rivian recently adjusted its overall delivery forecast for 2025 downward, citing market uncertainty. The company now expects to deliver between 40,000 and 46,000 vehicles this year, compared to an earlier estimate of up to 51,000. Even so, Rivian believes it has enough time before R2 production begins to manage cost pressures without passing them directly to customers. Batteries play a central role in that strategy. Rivian has signed a long-term agreement with LG Energy Solution to use advanced 4695 cylindrical battery cells. These cells are designed to be more energy-dense and space-efficient, helping Rivian deliver strong range without excessive weight or cost. Initially, the batteries for the R2 will be sourced from South Korea, which exposes them to tariffs and shipping costs. However, Rivian plans to transition battery sourcing to the United States beginning in early 2027. LG Energy Solution is building a new battery factory in Arizona that will produce the same cells used in the R2. Once that facility comes online, Rivian expects to reduce costs, simplify logistics, and strengthen its domestic supply chain, all of which support the company's long-term pricing goals. For Rivian, the R2 is more than just another model. It is a potential turning point. The company has acknowledged that it still expects to lose between $1.7 and $1.9 billion this year. Its current lineup, with prices often exceeding $70,000, limits how many buyers can realistically enter the brand. The R2's lower price opens the door to a much larger market. Higher volume also brings operational advantages. Producing more vehicles allows Rivian to spread development, tooling, and overhead costs across a larger number of units. That scale is essential if the company wants to move toward profitability rather than remaining a niche premium manufacturer. The R2 also lays the groundwork for Rivian's future. Below it in the lineup will be the even smaller R3 and the sport-focused Rex, both expected to arrive in 2027. Together, these vehicles represent Rivian's plan to grow beyond early adopters and outdoor enthusiasts into the mainstream electric vehicle market. As of now, Rivian says the plan remains on schedule. Validation builds are rolling, factories are being prepared, suppliers are locked in, and the $45,000 target is still intact. If Rivian can deliver on these promises, the R2 may become the vehicle that transforms Rivian from a promising startup into a sustainable, competitive automaker in the global EV landscape.